Hi, everyone. My name is Rick Poulin. I'm the manager at Coldwell Banker Premier Realtors in Southington. And today I have the privilege of interviewing Mike House from Bestway Mortgage, who's over in Wolcott, Connecticut. Mike, how are you today?
Good. How are you, Rick? Thanks for doing this.
Yeah, thank you. Thank you for joining us. How's the family? How's Mary and the kids?
Yeah, everybody's doing good. We're all, stuck at home like most other people, but luckily I have a home office, so we're able to do most things from
Yeah,
here.
yeah. So how was Mary's birthday last week? How'd it go?
It went very well. We didn't have too many people over, obviously, but she had a good day. I made my famous carrot cake, so she was happy about that.
So there's a famous Mike House carrot cake?
There is, yeah.
Wow, good for you. You didn't buy it or anything. You made this cake.
Oh yeah, peeled the carrots and everything. Yeah.
Wow, awesome. Great. That's great. Everyone's healthy?
Yep. So far, so good.
Okay. So, Mike, how long have you been a loan officer? And you're a senior loan officer, correct?
Yeah. So I first got into the business in 2001. So it's been just under 20 years.
Okay.
I've worked with several of the top companies in Connecticut before coming to Bestway.
Okay. Okay. So 20 years, that's just a little bit older than I am now. So,
Yeah,
why is that funny? That's not funny. I'm
well,
serious.
it's very believable.
I knew it. I knew you'd come around. All right. So one of the other thing is you guys serve the whole state, correct? It's not just Wolcott, it's everyone.
Yes, all counties of Connecticut we serve.
Okay,
Yeah.
perfect. All right. So I always get this question. So when I train new agents and even senior agents, I always get this question. When I talk about Mike House and Bestway Mortgage, they always say to me, is that his real name or did he change it? So right now, I just want to clarify for the entire world, Mike House is the name you were born with, correct?
Yeah, that is correct. I did
All right.
not change my name. Yeah.
So you were predestined to do this, basically. You had no choice.
Exactly. Yeah.
Oh, all right. So
Definitely.
hey, it worked out. You didn't have to think about it when people asked you, "What are you going to do when you grow up?" Hey, I'm going to work with houses in some fashion. Correct? Obviously.
It, exactly. It fits.
All right. All right. So um, before we begin, well, why don't you give us a quick 60-second, like fast and furious overview of the basic lending process?
All right. Fast and furious, huh?
Fast and furious.
So I mean, basically, the lending process is, step one is to get a pre-approval from a loan officer. And the
Yeah.
pre-approval will tell you exactly what program that you're going to buy a house with and how much money you will need, what your payment will be, and all of the financial details that you'll need to be aware of before starting the process of finding a house. One thing to mention is to be careful to use someone that has all available programs because sometimes people get stuck with like banks and several lenders that are more strict or don't have as
Sure.
many options,
Right.
and
They're
they
limited.
can't they can't offer as many options as we can with less money down and lower rates and things like that. So once you have a pre-approval in hand, basically you just work with a realtor to find the right house. As long as you understand all the details, when you make an offer, that's when we start on the underwriting process and having the house appraised. And I mean, it takes about a month to a month and a half from start to finish to close on a house. So
Okay, that's not too bad. That's average, correct?
yeah, I mean, some lenders take longer. I mean, we can get it done, in 3, 4 weeks sometimes if everything lines up. But about average is a month and a half, I'd say.
Yeah, so I just had an agent tell me that you got them clear to close, which is the last step. I mean, that's basically they have the loan, we're just waiting to close on the home in 3 weeks. And that was a conventional mortgage, I think. That just happened last week sometime. That's what one of my agents told me. So I think that's great. That's awesome.
Yeah, we're able to get things through pretty quickly. I mean, we'll get loans into underwriting within a few days. A lot of lenders will take, a few weeks to get that far in the process. So we're really, able to streamline the process for people quite a bit.
Okay. So how has the pandemic affected the basic loan buying process or the loan process?
Sure. So, as an industry, we have had to evolve in several ways to, do business in a new way. Basically, everything that can be virtual is virtual. when people have their closings, did it virtually through Zoom meetings, and the attorney is either in a different room or in their car, or
Right. Kind of like right
they're
now.
able to work out. Yeah, so we've been able to still conduct closings and have everything move along even during the pandemic. The town halls are able to still allow people to do title searches and record deeds and things like that. So the impact has been more of a financial impact on different loan programs that are available and things like that, or if people are impacted personally with their
Hmm.
job, then that has been they're more strict about verifying that people are still working, or verifying that they haven't been impacted by the coronavirus before closing. So there's been a lot of changes like that to be more strict and making sure that people are still working and making the same money
Sure.
that they were.
Yeah, that makes sense. So you'd say it probably, I mean, based on this last loan with this particular agent with 3 weeks, would you say the process has slowed down at all, or just if at all, very little?
So, I mean, that really depends on the lender and who you use for an attorney and things like that, because a lot of lenders are working from home or remotely, and all of their processing and underwriting teams are, if they're not used to working remotely, then there can be some delays from that if they're not accustomed to
Right.
that workflow.
Right.
But the investors that we use are already accustomed to doing things remotely. So there was some adjustments where we saw a little bit of a delay here and there. I mean, more of the delay is from the volume of refinancing going on because of the rates being so low,
Hmm.
more so than the effect of Corona. So especially on refinances, we've seen quite a bit
Oh,
of
right.
delay, but purchase business is being prioritized. So they're trying to make as little of an impact on purchase business as possible, and just delaying the refinancing instead.
Okay. So I mean, it sounds like it hasn't had a huge impact in general.
Not really. I mean,
Okay.
for a lot of individuals would disagree if they were laid off or furloughed
Right.
or
Right.
something and they weren't able to do it. But we've seen a very minimal impact on people currently buying
Yeah,
houses.
that's
Deals
great.
falling through. Yeah,
Yeah, that's
so
great.
it hasn't been
Now, it's
too bad.
understandable that the banks would want to make sure people are still working, of course, and for them it makes it more difficult meeting the actual buyers. So that's a shame. But you did mention that the packages or the loan products have changed a little bit. So I think you mentioned something along those lines. So does that mean that the qualifications for buyers have changed, or what kind of qualification changes have we seen?
Sure. So this is one of the most important things for people to know about right now, is that FHA loans are very difficult to find for certain buyers.
Oh, okay.
Well, for all buyers, it's become more expensive to get FHA financing. And just a little bit of a background on that, why this is happening. They're expecting to have a historic amount of people defaulting on their mortgages, or
Mm,
stopping making mortgage payments. And someone even came out with these forbearance options for people.
yep.
And there's been some issues with that in the secondary mortgage market, because these arrangements that people have with their servicing companies say that if someone misses their payment within a certain amount of time, they have to buy that loan back and keep it on their books, and they're going to have to pay these people's payments for the amount of time that they're in their forbearance agreement. So there's been a lot of issues with that, because these big companies are fearful of FHA
Sure.
loans more so than conventional loans,
Sure.
because they think it's going to create an issue for them.
Sure. Okay.
Um,
Yeah, that's so for FHA it's affected things a bit, but not so much conventional.
yeah, so
What is FHA
right, and
exactly?
what's important. So FHA is a loan that's available for people with lower credit scores typically, or higher debt ratios, less money down. it's maybe a third of the business is FHA,
Okay.
because it just works out better for people in certain situations, or multifamily houses. But what's important to realize is that most lenders right now have restrictions that are new. They require a 660 credit score,
Oh,
or
yeah.
they require lower than a 50% debt ratio. So almost every day I've had, clients or realtors coming to me that, another lender couldn't do their loan because their credit score is under an amount, or their debt ratio is over a certain amount. So we still have an investor that's able to go down to 620 on FHA and over 50% debt ratio. They just make us wait to lock in the rate until we have an approval and an appraisal. So, but we're still able to get it done. So I'm saving quite a few deals right now for people that thought that they were okay and now they're not.
Hmm.
So that's important to realize. If anyone watching this is stuck because their lender can't do their FHA loan anymore, we still have a way to get those done.
Okay. And then pre-COVID, what was the lowest you can go on a credit score with FHA? Was it 620 or lower?
It was lower. I mean, technically you can do FHA down to 580, but the pricing on FHA loans, like even for a well-qualified buyer, you have to pay points right now to get an FHA loan, just because they're pricing in all of the added, risk that they're taking on with FHA business. So, and they're not really discriminating, just people with under a certain credit score or whatever, besides the 660 limit for most lenders. Everyone who gets an FHA loan right now is paying points.
Okay.
So,
For a newbie like me, what's a
yeah.
point?
So a point is like 1% of the loan amount. So,
Mm.
I mean, typical FHA loan right now, whereas normally you would be able to do it with no points or even get a credit back at the closing. Right now, when we price out with every investor is the same. They're all charging at least 1.5 to 2 points for every
Mhm.
single FHA loan, even for well-qualified buyers. But before the pandemic, we could do FHA loans down to 550 score. I mean,
Oh,
580 was typical. If someone that was 580 something, but it was, for a good reason, it was like a temporary situation. They have good income, good assets, and they were able to put down some extra money. We were still able to get that done. But I mean,
sure.
now under 620, when we price it out, we'd have to charge them more points than we're even legally allowed to get that done. So it's just not even an option.
Now, are these points to be paid up front, or are they built into the mortgage?
Yeah, so points have to be paid at the closing. And
Got it.
it's strange for me to be talking about points because, I never charge anyone points, and I hate points. And like the fact that when I pre-approve someone now for
Yeah.
FHA, we have to have a discussion about points in the beginning.
Right.
It's uncomfortable. But I mean, it's just the way that the market is right now.
Yeah. Okay. Um, Forbearance versus forgiveness, because you've said the word forbearance a couple of times. What does that mean?
Yeah, so there was legislation that came out that is allowing people to do a 3 to 6 month forbearance on their mortgages. So if someone was impacted by Corona, they're able to call their servicing company, whoever they make their mortgage payment to, and have them give them a forbearance agreement for up to 6 months. And so what that is, like my stepdaughter got one of these agreements because her husband was affected by Corona. And
Hmm.
what they say is that after the forbearance period, you still are going to owe that money that you were
Sure.
supposed to be paying. So they said in this letter that they sent them that they would have to work something out afterwards, pay more per month, or
Yep.
I think it depends on the service. Some servicers are willing to add that to the end of the mortgage, but it's been such a short amount of time
Yeah.
to have this legislation come out and be compatible with Fannie Mae and Freddie Mac's rules about buying loans back, and there's just so much uncertainty about these programs. But it should work out where it doesn't affect people's credit and they're able to take advantage of it, and they're trying to minimize the impact on the business as well in general. So it should be a good thing for people once they work out the details.
Yeah. So from what I understand, the servicers are the ones who are going to take on the brunt of this a little bit, and so for them, there's a lot of questions in the air. The ones that you're
Yeah,
actually making the
exactly.
payments
Because
to.
they're the ones that, I mean, from my understanding, when they own someone's mortgage, they still, even if someone is
Yeah.
legally able to skip their payments, they
Right.
still have to
Make their,
pay the interest on that debt to
yeah.
whoever they owe it to,
Yeah.
mortgage-backed securities or
Yeah.
bonds, whatever it is.
Yeah. I wonder what's going to happen with that. All right. So how does all of this impact someone who needs to buy a house right now?
Right. So if someone is looking to buy a house right now, if they've already been pre-approved, I would have them double check with their loan officer to make sure that the terms of their loan haven't changed.
Sure. Yeah.
Because I know for me, like I had someone that was pre-approved right before the Corona stuff hit. And, we were going to do an FHA loan for them at 3% with no points. And then it took the seller a week and a half to accept their contract. So
Yeah.
they came back to me with an accepted contract thinking that, they could still get those terms. And by that time, the FHA market had somewhat exploded, and their rate was going to be 3.625 with a point and a half or 2 points, and it was just a lot different. So we ended up having to put them in a different program and everything. So depending on how long someone's been pre-approved, I would definitely suggest just making sure with your loan officer that the terms haven't changed. Sometimes you might have to plan on extra expenses, or maybe you don't qualify with them anymore, and they're just trying to wait it out and hoping that things will change. But you definitely want to make sure that you still qualify based on the pre-approval that you have.
What about the people who are already in the process of buying a home and in, the process of getting a loan?
Sure. So, I mean, people that have been impacted by Corona, definitely let your loan officer know about that, because, if you are furloughed or not currently working or collecting short-term unemployment or something, that is going to be an issue with your loan. So you won't be able to close while you're in a situation like that.
Right, right.
So definitely make sure you let people know about that
Mm-hmm.
ahead of time. I had one client that they were laid off from their job, and they didn't think that it was worth mentioning to anyone until a few days before the closing. And obviously that was a problem. We ended up being able to add a co-borrower and getting it done, within a short amount of time. But still, I mean, to be able to find a solution or to get extensions, just make sure that if you're pre-approved right now, be prepared that they're going to have to make sure that you're working right before the closing.
Yeah,
You'll
of
need some
course.
sort of a documentation. If you're self-employed, they want a letter from a CPA stating that you're still able to conduct business during the Corona stuff going on. So there's been some changes. But if your employer is closed, but you're still on a salary or being paid, they have made some leniencies where you can just use a pay stub that you've gotten within the last 14 days of the closing to close, and that will count as your verification of employment if they can't contact your human resources department because they're working from home or nobody can reach
Sure.
them. So
Yeah, right. Okay, well, that's it from me. Is there anything else you wanted to add?
not really, just if anyone has any questions, feel free to reach out to me. I mean, we can put my contact information
Yeah, why don't you
here.
tell us that right now?
Sure. So to reach me by email, it's mike@bethwaymortgage.com, or my cell phone number, since I'm working at my home office for the time being, is 860-424-1737. Feel free to text, email, or call me anytime if anyone watching has questions.
Right, awesome. Well, thank you so much for your time, Mike. And for those of you who are watching, thank you so much for watching. Hopefully you got some information out of this. For a lot of people right now, of course, because of COVID and what we're going through, have paused, and understandably so. Everybody has to stay safe. And so to everyone who has paused, it's completely understandable, and we want you all to stay safe. But there are still some people out there who absolutely need to move. And for those people, I just want you to know that Mike House at Best Way Mortgage and the agents over at Coldwell Banker are still here to help. So feel free to reach out. Anything else, Mike? You good?
No, that's it. Thanks, Rick. Have a good day.
Thanks again. Bye-bye, everyone. Be good and be safe. Bye-bye.